As of Tuesday, December 23, 2025 at 5:42 p.m. IST, the U.S. markets have not yet opened for the regular session. SMX, Security Matters PLC, trading under the ticker symbol SMX on the NASDAQ, is currently closed following the last session on December 22, where it finished at $167.17 USD. This reflected a decline of $8.86, or approximately 5.03% for that specific day. While the headline figure shows a pullback, looking at the screen of your individual brokerage or your preferred investing sites often tells only a fraction of the story. If you're checking this on the Robinhood app or through Interactive Brokers trading platforms, you might see the red today, but you're likely missing the fact that this specific ticker has moved more than 1,900% since late November. We aren't just talking about a volatile microcap anymore. We're looking at a structural repricing of how physical assets are verified in a global supply chain that is increasingly suspicious of paperwork. Most people look at a chart like this and assume it's a typical pump and dump scenario that you see on some of the more aggressive Robinhood stock trading forums. The expectation is that a stock moving from single digits to over $170 in weeks must be a bubble destined to pop. However, the reality is far more complex. We are seeing a massive shift where gold and other high-value commodities are being treated as data assets rather than just heavy metals. When you use your SoFi active investing account or look through Schwab Intelligent Portfolios to find growth, you usually look for software or AI. But SMX is applying a high-tech layer to the oldest asset in human history, gold. By using molecular-level markers that are embedded directly into the metal, they've created a way to authenticate origin and purity that survives melting and refining. This isn't just a new feature, it's a total overhaul of the trust model that has governed the gold trade for centuries. The general belief is that if you have a bar of gold with a refinery stamp and a serial number, it's legitimate. SMX is challenging that common ground by pointing out that stamps can be forged and documentation can be altered. In an age of heavy sanctions and intense scrutiny over conflict minerals, good enough is no longer acceptable for major institutions. This is why the recent momentum has been so aggressive. Just yesterday, the company announced new alliances with Bougainville Refinery and biometric identity provider Fingo. They aren't just tracking the gold, they are now linking the physical metal to the specific human being handling it. If you're using Fidelity Wealth Management or Interactive Brokers trading platform to manage serious capital, you know that compliance is the invisible force that moves markets. SMX is positioning itself to be the compliance backbone of a trillion-dollar market. While retail traders on the Robinhood app are chasing the daily swings, institutional activity is where the real tension lies. We've seen search interest for SMX stock jump by over 3,600% in the last 30 days, and transactional interest on platforms like IND Money is up nearly 1,000%. This tells us that the smart money is starting to wake up to the idea that verified gold might soon trade at a premium over unverified gold. Imagine a two-tiered market where bullion that can be forensically proven to be ethically sourced is more liquid and more valuable. If that happens, the current price of $167 might actually look like a starting point rather than a peak. Of course, the risks are high. The stock had an 8-to-1 reverse split in November, and the float is incredibly tight, which explains why the volatility is so extreme. One day you're up 12% in pre-market, and the next you're seeing a 5% pullback like we did on Monday. The macroeconomic pressure here is a massive factor. Central banks are loading up on gold at record rates, but they are also facing more pressure than ever to prove they aren't accidentally buying sanctioned material. If you're doing your self-investing through a Fidelity trading platform or checking your SoFi Invest portfolio, you've likely noticed that commodity-linked stocks are sensitive to these geopolitical shifts. SMX is riding that wave. Their true gold platform is being built to preserve the physical to digital identity of gold from the mine to the vault. It's essentially a way to put the physical world on a blockchain without the fluff. They aren't selling a story, they're selling a forensic lock and key for the global supply chain. Let's step back and look at what this company actually does, because it's easy to get lost in the ticker symbols. SMX specializes in marking materials. They use a chemical-based hidden barcode that is added to products at a molecular level. It's invisible, it's permanent, and it can be read by a proprietary scanner. They've applied this to plastics for recycling, to high-end luxury goods, and now, most successfully, to gold. Their business model relies on licensing this technology to major players who need to prove their sustainability or compliance credentials. Instead of relying on a human being to sign a document saying this is recycled plastic, the material itself tells the truth when scanned. It's an elegant solution to a very messy global problem. If you've been following Apple stock or Nvidia stock lately, you know that the market rewards companies that own the standard for their industry. SMX is trying to become the standard for forensic verification. When you look at their older reports, the performance was lackluster for a long time. They were a small company with a big idea that didn't have much traction. But then the Dubai Multi-Commodities Conference happened in November, and suddenly the world's biggest gold traders were looking at this technology as a way to solve their compliance headaches. That was the spark. Since then, the market has been trying to figure out how to value a company that could potentially tax every ounce of verified gold that moves through a refinery. The technicals are just as wild as the fundamentals. The short-term trend is undeniably positive, even with the 5% dip we saw on the 22. The stock is currently trading above its 20-day and 50-day moving averages, though it remains below its 200-day average due to the massive long-term decline it suffered before this recent breakout. It's a classic turnaround play, but one with extreme volatility. The average true range is through the roof, meaning if you're using Robinhood fractional shares to get a piece of this, you need to be prepared for $20 or $30 swings in a single hour. This isn't the kind of thing you'd find in a conservative Schwab Intelligent portfolio. This is high conviction, high risk, active trading. Comment below how many shares of SMX you currently hold, or if you think the gold industry will actually adopt this kind of molecular tracking. I'm curious to see if you think the big banks will fight this or embrace it. Looking ahead, the future outlook for SMX depends on one thing: institutional mandates. If a major exchange like the LBMA or a massive bank starts requiring molecularly verified gold for its good delivery list, the demand for SMX's technology would go from interesting to mandatory overnight. That's the catalyst everyone is waiting for. The risk, however, is that a competitor comes up with a simpler or cheaper way to do this, or that the current momentum is purely a function of the tight float and will eventually run out of steam. We are also seeing high short interest, which adds fuel to the fire whenever there is a bit of good news. A short squeeze on a stock with this little supply can lead to those $400 plus spikes we saw briefly in the past. If you're using Fidelity IRAs or a SoFi robo-advisor, you're likely used to a smoother ride. SMX is the opposite of that. It is a battleground stock where the expectation of a speculative bubble is constantly clashing with the reality of real-world partnerships and technological validation. The bears will point to the lack of massive revenue in past filings. The bulls will point to the recent deals with Fingo and Bougainville as proof that the revenue is coming. It's a classic wait-and-see game, but the price isn't waiting. It's moving fast, and it's forcing investors to make a decision. Whether you're doing your online investing through a Fidelity mobile app or managing a more complex setup on the Interactive Brokers platform, the lesson of SMX is about the value of truth in a digital world. We spend so much time worrying about digital security, but we often forget that the physical items we trade, the gold in our vaults and the plastic in our oceans, are still verified using systems from the 19th century. SMX is trying to bring that into the modern age. It's a high-stakes bet on the idea that the world is tired of guessing and ready to start knowing. In summary, SMX is currently in a consolidation phase at $167.17 after a massive multi-week run-up. The contrast between the expectation of a speculative crash and the reality of expanding operational partnerships is what's keeping this stock in the spotlight. We've moved past the initial shock of the 1900% move and are now entering the prove-it phase. The company has the technology, it has the recent alliances, and it has the market's attention. Now it needs to show that it can scale this molecular verification across the global gold supply chain without hitting a wall. For those using online investing tools or an individual brokerage, this remains one of the most interesting, albeit dangerous, stories in the market today. Keep a close eye on those pre